next guest sees more room to run in the months ahead. Joining me now with his bull case, Chris Hyzy, Merrill and Bank of America Private Bank. My first question is good to see you. Was going to be you've been bullish with us, and sounds like you remain so.
Yeah, we've got a lot of momentum behind this. You know, everybody talks about the cash on the sideline, Scott. You and I have talked about this for months now. That's one way to gauge it. But the most important way to gauge how much momentum you have is changing the wedge that's been in the market. The wedge that's been in the market continues to be the risks that are very tough to measure. Geopolitical risks, concerns around elections. But the biggest wedge that was in the market last year and in 2022 was inflation. That's beginning to go away. It's almost to the fact where no one's talking about whether or not we're going to have inflation that's worrisome. Now, that we'll revisit that later. But the second part is this. The two major economies in the world, now with China joining the Fed and the fiscal party in the United States at a time when profits are going up, that strikes me as two tailwinds that create a meltdown that we really haven't talked about.
How powerful? And I mean, you mentioned these issues that are still, these impediments perhaps that are still in the way, like the election among other things. We're not 100% certain that we've got this soft landing nailed at this point. I mean, we think we do. We hope we do. But we're not fully sold on that, are we?
No, I mean, one of the things that everybody talks about is this binary approach to a landing, soft or hard. There's a lot of different scenarios in between those two. You usually have a soft landing for an extended period of time before you get a hard landing. But to get a hard landing, you need excessive leverage in the areas that matter most: the consumer or the household and or the corporation, neither of which have that leverage or that massive concern that typically is before a hard landing. So we have a lot of components of a soft landing. I'd like to say it's more of a mid-cycle slowdown with easier financial conditions that should actually create a profit revision to the upside, not downside, which is what you would typically see in cycles.
So you think, right, that the debate centers around market valuation, 15% earnings growth expected next year. You think that's all legit? Like we can meet that, what feels to be a higher bar?
I think what we can meet is a better outlook than what most are suggesting. Now, when we talk to clients, they're very apprehensive of going out long in the curve. They want to stay with that area of the short end of the curve that they're comfortable with. So they've yet to move out on the spectrum. They're very concerned about adding more into the market because of geopolitical risk and or concerns. And they're waiting for a little bit more of a all systems go sign. Unfortunately, you know how this works. You climb the wall of worry. Next thing you know, things are starting to get better and you're at higher highs. So for next year, the 15%, sure, it's probably going to come down. But what most people believe in terms of real active risk is much lower than that. So we think that that gap has to narrow. And I think you could see momentum to the upside in profits at a time when financial conditions are going to get easier.
Yeah. Chris, I got to run. We'll leave it there. More room next time. I appreciate you. Chris Hyzy.